Hello, welcome back guys to the channel. Today we're going to be doing a video for the rookies out there, the new guys. We're going to be looking into how to find edge. How do we find edge as a trader? A good place to start is what is the definition of an edge in the markets, and what an edge is effectively is a higher probability of one thing happening over another. Step one in finding edge as a trader is you have to find some sort of pattern or tool that in some capacity eliminates randomness or typically provides a move off of that level or tool. So we're going to dive in, and this is the ES here, and this is just a naked chart, not typically what I look at. Say you're really into moving averages, and moving averages just make sense to you for whatever reason. What you can do is you can use moving averages to try and craft an edge. Let's say in this example that I am the type of guy that enjoys the exponential moving average over a simple weighted or any of the other moving averages. One trick that I learned from another YouTube channel, you guys have probably heard him, SMB Capital, about moving averages specifically, is you can use a daily moving average on a lower time frame chart. And what I mean by that is if I were to go over here to let's make a new chart. If we were to go to a daily chart and we put on a EMA, a moving average exponential, and we wanted a daily moving average, so we're going to type in 1. So every single day this moving average calculates the average price from the open and the close of the candle. So we look at this moving average, and I'll make it thicker. You can see it's not really giving us any information really whatsoever. You can't really derive any information off of this because it's too zoomed in. The time frame is too high to gain any information off of this chart here. So with that being said, what we can do is we can run over back to the 1 minute chart, and this is going to be kind of tailored more towards intraday and scalpers a bit because that's what I do. What we're going to do is we're going to do a calculation. We'll go to calculator here. Okay, let's see how many 1 minute bars are there in a single trading day. So the market opens at 8:30 in the morning for me and closes at 3:10 p.m. So that roughly translates to 390 minutes. So 390 minutes. So for the first moving average we're going to do is a daily moving average. So 390 minutes goes into each regular trading hours session, RTH session. So this first moving average is going to be set at 390, and we'll make it 5, and we'll set that as a yellow. Okay, and the reason why we're doing a daily moving average is because typically a lot of traders are, they're concerned about, where is the price opening and where is the price closing on a intraday basis. So that is kind of why we're looking at the daily moving average instead of like a 21 bar, because if we were to only have a 21 period moving average, that's only measuring the last 21 bars from the current spread. So we want to look at the entire day. And it's also important to note that edge, you can gather edge from really anything. You can gather edge from trading ranges, you can gather edge from trading Fibonacci. I'm sure there's people that do it out there. Edge is everywhere. You just have to eliminate the randomness and only trade when that pattern shows up. So we've got our daily moving average, and then we're going to come back and we're going to grab another EMA. We're going to run back to our calculator here. The next EMA that we're going to do is a 21-day moving average. And the reason why we're choosing 21 is there are typically 21 trading days in a month, which is an objectively pretty important time frame in the market. You know, there's probably a lot of algos going to be attached to this moving average. You know, a lot of people are probably looking at monthly volume profiles or market profiles, so this monthly moving average is going to be pretty important. So what we're going to do is we know that 390 minutes are in one session, so we're going to do this. We're going to multiply 390 times 21, and that gives us a total of 8,190. So what we're going to do is we're going to come over to our next moving average, 8,190, and we're going to make this twice as thick, and we're going to make this red. Okay, so now we have some moving averages, which is some pretty simple stuff, but what's important is they generate trading opportunities based off of a mathematical formula, which, you know, you can call it schmutz, you can call it trash. Say what you want about moving averages, they produce price movement. Just in this example, you know, we'd be looking to trade this moving average. So next thing we do, and on this channel, because we love order flow, we're then going to add some order flow bars, and we're going to only be looking to take trades off of the daily moving average or the 21-day moving average. So the market is about to open, and it looks like we are testing that daily moving average. And you know what we could be doing is looking for once we get this bounce, we could be looking for some demand to start entering the market, and this is going to be for a bit larger time frame, a bit less scalpier in intraday than I would do, but we could start and wait to look for some demand to enter the market. So we're getting this bounce off this daily moving average here on the open, which is nice, and we start to see some demand here at the 82.50. So we could take that as an entry signal here, so we would have gotten filled at this 82.50. Let's see, try and do a stop loss. You could try below the swing low of this moving average, or below this demand, or below this demand, and have a 2-to-1 risk reward. So that risk reward would look something like this. So this is 36 ticks, so we're looking for 64 ticks on this. That'd be 2-to-1, or we'll just go in a simple 60 ticks. Not quite 2-to-1, but this is just how we generate trade ideas. You know, we're getting a bounce off this daily moving average, which you know, is the first time this has happened here in quite some time. And so we know to hold this trend, you know, we want to see this daily moving average hold. So we're entering with this demand. We've got our risk and our reward specified here, and we're just going to simply let the trade play out, because, you know, we identified the setup. The setup was to bounce off this moving average. We enter with some good buying activity, and we're just going to wait and see how the trade plays out. Okay, I mean, this is going a lot better than I anticipated, but we have some nice demand here up at the 89.50s. Still some really good buying here at the 792s, and this is right off market open, so we're seeing a nice open drive here. Yeah, about an open drive, and well, I mean, yeah, you get your fill pretty fast here. I mean, this isn't cherry picked, but this is, you know, it's surprising that it went to target, what was this, perfectly? Okay, maybe it was cherry picked. Listen, I don't know, but this is just a coincidence. You know, obviously not all trades are going to work this perfectly, and it's just a coincidence that I put it at 60 ticks instead of 64, because if I did 64 ticks, then we wouldn't have been filled. But you know, I mean, if we did 64 ticks, we still would have been filled. But regardless, so let's see the next time that we get a bounce off this moving average. Where's the 5-day moving average? So the 5-day moving average is way down here, so we don't have a trade with the 5-day moving average just yet. Probably won't see that today, but once again, this is just some random kind of system that I'm trying to cook up here, just to, you know, help you guys, give you guys ideas on how to eliminate some of the randomness in the market. Okay, looks like we're coming into this EMA, maybe. All right, here. So we came into this EMA, and now what we want to do is, I'm going to change my filter because this is kind of a bit convoluted here. We're going to change it up to 80, get rid of some of this noise. Alright, so now what we can do is we can wait for some demand to show itself in the market. Alright, so they close out those guys here. So we'd be long 802.50 because I'd wait for this candle to close, and then we would just take the long once we get the fill at 802, getting long with these 234 traders to the long side. So we'd be long 802.50, and once again we can do a stop down here at the lows below this moving average. And I'm just shooting ideas here, but we're trying to see if we can continue this trend. Oh, we forgot to set our tick profits. 1 second. 40 ticks. We'll target this supply, you know, and this is where we can kind of use our laws of supply and demand to generate profit targets here. But let's see if now the trade is out of our hands now. We let the setup just kind of do what it has to do. We don't have any in control of whether or not other participation from the long side is even going to step in. It is totally up to the people that get long in front of you to make yourself a winner. So let's see if we can get this trade to go for ourselves. Coming close to that TP. Alright, so it looks like this one was a stop. Okay, so now we could have been taking some size off the table as we got closer to that TP to mitigate that risk, and we could have even eventually moved our stop to the break even, but inevitably this was a stop out. But you can kind of see how even though we didn't make the full TP, we were able to see some nice profits. And then that's where you can start to apply risk management strategies to take some money off the table, lock in some profits, and mitigate your risk overall. Because, you know, you want to be taking profits along the way as a trader, especially if, you know, you're taking larger moves like these, just because you never know what's going to happen. Like, clearly these sellers here up at this 808.50 was enough to hold the market down and create a sentiment shift. And, you know, it looks like we're kind of just we even lost the moving average here. So last one here, let's see if we can take a trade. All right, so we're starting to see some acceptance below this moving average. We should probably wait for these buyers to get squeezed out of their positions before we enter a short, just to kind of confirm that the overall trend is down. So it looks like these buyers are getting trapped. We could maybe wait for the flush, but let's just be aggressive, because why not? Let's take this 79.50 short. Alright, so we've got our risk and we've got our reward. Let's go ahead and just take it off at this demand here, just to keep it simple. Yeah, so we're kind of saying at this point that we think that we're going to start trending lower, because this is the first time that we've seen the loss of this EMA all day. So let's see if we can get our fill here. So this isn't looking great from, you know, how I would be trading, but nonetheless, let's keep watching here. And another stop out. So this trade didn't go our way, and sometimes that's just the way that it goes. Now, in order to counteract this, potentially what you could do is wait for a swing low or a move in one direction away from the EMA to kind of confirm the move, because we've just been chopping it. You know, in this trade we were a bit aggressive, and you know, we took the loss because of it, which is fine. But yeah, and this is you know, just a quick little system that I threw together, and it's, you know, what's important is we're eliminating some of the randomness. We have parameters. Our parameters are, we need to be touching the EMA, or we need a bounce off an EMA, and then we want to enter with some demand, kind of showing their cards, and just let the trade play out. And once you have a system kind of like that, then you can start applying some risk management strategies, like, you know, maybe for instance, instead of taking the full loss on that trade, when you get a third of the way down, like maybe this was like a third of the way down to our TP, maybe you take one contract off there. Maybe you're trading 3 contracts and you take 1 contract off. When you get a third of the way there, another 2/3, and then the rest when you get obviously the full take profit. And then that also would have locked us in some profits on this second trade. Yeah, that's you know, kind of how you want to go about finding edge in the market. And obviously there's back testing, and you can use TRADECRAFT, the best trading journal on the market, hands down. Thank you to the guys over at TRADECRAFT. But what you can do is you can start making tags for specific trade setups, like maybe you're tracking the daily moving average, and that's something that I recently have been kind of looking at because it's interesting, and that's kind of why I chose the moving average to do this video, just because it's interesting and it might provide some trade opportunities. So maybe you're testing that out, maybe you're testing out, you know, 24-hour value areas. And then, you know, you can start looking at all of these tags, and over time you take more and more of these moving average trades, and then it will show you your statistics behind all of those trades. And then that's how you discover if your idea or your hypothesis with your trading system, or your idea as far as a trade setup, that's how you decipher if it actually has edge. So it starts off with an idea, and then you go through and you tag the statistics or tag the trades, and then you develop statistics to ultimately gather edge. So hope this video helped some of you newer guys. If you guys have any questions, you know, feel free to drop a comment, drop a like, subscribe, and I'll see you in the next video. Capiche?